Hey everyone, it's a cold day in February. It's Randy Hatada here from Xpand Realty to give you your February housing update. All of you guys probably want to know what's going on with our market because word on the street is that our market has shifted. And the rumor is true. Our market is changing and it is headed towards the favor of the sellers. We had the slowest 2023 in over 20 plus years, guys. And a lot had to do, as you know, with interest rates on the rise and just combating high interest rates in general. High interest rates affect both the seller and the buyer. And with that being said, our market has been extremely slow. However, January has put on a new face, and I'm going to be reporting January numbers for your February report. Before we get into housing numbers, just a quick update on our weather. It is cold out here in Vegas, about 40 degrees right now, and Lee Canyon has experienced a heavy downfall of snow. So it's snow-capped. In fact, a lot of our mountains right now are snow-capped. Thus, we're getting the mountain winds, making it a little chilly for us. I want to say tropical folk, but we're just not used to the cold is the long story short. Snowboarder skiers, good news for you guys because there's a ton of snow. People are ripping it up there. In fact, on the bad side, there was an avalanche this past week. Luckily, they did find the 4 missing people. So be careful out there. You know, I think the best advice for you guys would be to use some kind of device where people can find you in the mountains should something happen to you, and keep a good eye on your children, guys. But with that, have fun. We were up there about 2 weeks ago, or maybe 3, but it was really good. You know, I don't know if you guys know this, but Mount Charleston and Lee Canyon's only about an hour out from Las Vegas. And yes, we have snow a lot of the winter months up there. Sometimes it snows in town, but very rarely, maybe once every 2 years. But in the mountains up there, you can find snow, and it's under new ownership, and they're bringing in a lot of bells and whistles, including a new ski lift, which means a new ski route. So have fun, you know, take advantage of that. Go learn to ski and snowboard if you haven't, because I think it's a hobby that will be something that you'll hang on to forever. All right, so getting into the meat and potatoes, or the windows and doors, Las Vegas housing. So January has been an extremely crazy month for us realtors. There's been a lot of movement for sellers and for buyers and for new builders. Right now, our units sold is about just shy of 1,500. We're about 1,480 units sold, which is less sales than December. And you might be thinking, how can it be a hot market if we're below December sales? Well, I'll be explaining that along with a lot of the big changes, and the numbers that haven't changed, we won't spend so much time on those because I don't think those need a lot of explanation. But as far as units sold, 1,480 is where we're at. That's down 40 sales from December, and that's about 2.6% decrease. And our average, our median price point is $445,000, which is a $5,000 decrease since December. So to explain what's going on and why it's a hot market, however, we're looking at numbers that are negative. One is that we're looking at past history, so the month before. We're also looking at year over year. So the numbers haven't caught up with us, and I'll be talking about that with new listings, units available, and pending sales. So to reiterate, we're down 2.6% from last month in units sold, and that's still above last year, year over year, same time, where we're up about 11% from last year. And our median price, $445,000, is up about 5% from last year. So again, last year was the slowest year in a very, very, very long time. But things are going to turn around, and I already have some personal experiences that I'll share with you. Now, based on that, what's happened is that we have 2,158 pending sales, something we don't always talk about, pending sales. Why is that important? It's important because we will know all the transactions that have been accepted in January and probably closing in February and maybe even beginning of March. So it'll affect our February numbers. So you can stay ahead of what's happening this month with those in escrow or pending sale numbers. So what's interesting, or what stands out about this number, is that we're up 43% from the month before. So almost double the amount of accepted sales have happened, and we have almost double the amount of escrows than we did in December. So what does that tell us? February will show some hot figures on what has happened in January. So realtors out there have been working really hard in January. Buyers and sellers have been on the move in January. And I think a lot of you guys expected this with the new year and the adjustment of interest rates. But these are huge numbers, you guys, and the market has changed. And I'll explain what that means to you regardless if you're a buyer, seller, or renter. As far as new listings, we have 2,432 new listings. This is a number we're going to spend a little time on, guys, because this is a huge number that has changed from last month. Last month, we only had, and last month meaning December, again, we're looking at reactive numbers. In December, we only had 1,500 new listings. In January, we had 2,432 new listings. That's a 953 count improvement in more listings or new listings. That's a 60% increase, 60, you guys, more than, well, you can do the math on that, but it's a 60% increase from last month. That's crazy, right? What does that say? That says that sellers that have been looking to sell feel confident that they can sell for the price they want in today's market. And in fact, they're so confident that they're listing their homes aggressively above what the market supports. And, you know, throughout the past meetings or past shares with you guys on market updates, we talked about listing strategies, right? We talked about listing high, leaving room for negotiation. We talked about listing on par with the market to create a quick sale or even a bidding war. Or we even talked about listing low and creating for sure a bidding war in a strong market, right? Now, with that being said, our median price point is $490,000 today for new listings. What does that mean? Well, what it means is that we've risen in median price of new listings by $25,000. And median sold prices dipped by $5,000. So that tells me that sellers are getting educated by whatever materials they're getting their hands on. They're getting consulted by their realtors, and they're shooting very high and hoping that all these closings in January close at high amounts. And I'll tell you what, from personal experience, they probably will. We have had listings that have sat on the market 3 months, 6 months during our slowest year, 2023. And in January, we've had multiple offers on these same properties. In fact, some above list due to bidding wars and multiple offers. And so if it closes, we'll have appreciation, right? And so based on all of this and knowing all of this, a lot of sellers are inflating or fishing for a higher number, even though sales have dipped in January from December numbers. So here's a little information that you can use. If our median list price, new listing price, is $490,000 and our median close price is $445,000, what does that mean? It means multiple things. That means that sellers are really confident that they're going to get stronger offers, higher offers. On the buyer side, that means that maybe there's room for negotiation, right? Because that is a big gap between 490 and the close price of 445. Consult your realtor and figure that out. But there's multiple ways to look at this. And there's a big gap between median new list price and median sold price. And to figure out how to utilize that gap in your best interest would come down to strategy. My concern for the sellers in this kind of market is that a lot of the sellers are getting close to the list prices they're asking. Now, reactively, an issue with that is appraisals. And just so you guys know, if you didn't, appraisals are done mainly to protect the lender, which is why your mortgage lender requires an appraisal. It's really to protect the lender from overlending, right? So they want to make sure that the property you're buying is valued at what they are, so their loan ratio is valued based on what they think it's worth, right? And if the appraisal falls short on the agreed upon price, either seller has to come down on the negotiated price, buyer has to kick in out-of-pocket money to cover that gap between agreed upon price and appraisal amount, or maybe they split the difference between buyer seller and there's a compromise somewhere in between. But the biggest problem that I see in this kind of market is that as we see people bid above market, that's how we get appreciation, but that's how we have to overcome appraisal shortages should the buyers be using financing. In this market, if cash is coming in and cash buyer comes in strong at list, maybe even above, cash is king in this kind of market because the seller does not have to worry about appraisals. Here's a fun fact. VA and FHA appraisals follow the property, I believe, for about 3 months-ish. So if the appraisal comes in short, there's a good chance that that appraisal will be reused for the next VA FHA buyer on the same property. So sellers, be aware of that, understand how to utilize that. And if you come in short, make sure your listing agent is disclosing that to back up VA and FHA offers, because if not, you'll be in the same boat with an appraisal issue. So make sure that the buyers are aware of that. Make sure the buyers are ready to potentially cover the gap out of pocket and have the ability to do that. But that's a whole lengthy conversation that you should be having with your buyer's agent. And if you don't have a buyer's agent, reach out to us, because these are things we deal with on a daily basis. All right, so we spent a lot of time on those huge numbers and huge changes. We're gonna go into units available now. So we went into new listings and median price of new listings. Now we're going to units available. What's out there today? So we have 3,551 listings today. That's 215 listings less than last month, less than December. So even though we have a whole bunch of new listings hitting the market, buyers are absorbing that and more, and our inventory is less than it was last month. That's how we do the calculation here, right? And so there's less houses to choose from, buyers. Be aware of that, sellers. It's in your advantage. As far as effective availability, month supply, saturation rate, meaning all the same thing. We're at a 2.4 month supply of inventory, which is about the same as last month, which is down 40% from last year. So 40%, so last year we had 40% more available month supply than we do this year. And so inventory is slim on a healthy market. I'd say a healthy market's about a 3-month supply. We're short of that. So it is favoring the sellers, which is why they're pricing their properties higher, and which is why the good ones are getting those prices or bidding wars. And, hopefully strategically both buyer and seller agents are strategizing the appraisal concern, because it's not just getting an offer and getting into escrow, it is closing the deal that makes all the difference. I don't want to spend too much time in condos, but it is relevant, so we will hit the numbers again and spend time on numbers that have had differences from last month and not so much on numbers that have not. So units sold, we have 476 units sold in January. That's up 13 more sales from December. Our median price of sales are $275,000. This is a number to focus in on, because that's $5,000 higher than the month before. The month before we were at 270 median price point for condos. Now we're at 275, meaning that there's appreciation going on with condominiums. And that's the opposite that happened last month with single family residences. But that's about to change for single-family residences. We just talked about the why, and I'll give you a summary in the end about our thoughts on the entire market. As far as new listings, we have 280 new condo listings. Again, I think sellers are pretty confident with today's market and getting what they want. So more listings are hitting the market, and 780 new listings. That's up 280 listings from last month and up 22% year over year. Our median price is $289,500, no change there. So our units sold have come up 5,000. The median price that sellers are asking, no change. So not a lot of time spent here. Units available, we're at 1,136 units available. That's pretty much on par with last month. Not a lot of change there. With the new units, new listings available, the increase in sales has garbled that up, and we are still at a low month supply of 2.4 month supply, which is equal to last month as well. So no change there. At still low, 23% year over year though. 2.4 month supply again is much less than what I would say a healthy market at 3 month supply. So inventory is low, demand is high. I see some change coming in the near future in favor of the sellers, and I see a lot of the buyers on the sidelines that have been waiting 2023 starting to pull the trigger. So you guys got the numbers. So let's talk about what is going on in the market, why is this happening, and what we are seeing through our experience. So again, in our experience, I've personally been blessed to do quite a bit of listings lately. And again, the listings that have been sitting around are getting offers. They're starting to move. Our daily traction, our daily viewings are starting to increase. Our open house count is starting to increase. I mean, we've had open houses in 2023 with no one showing up. Certain ones anyway. Realtors working really hard. Today, we have about 5 to 10 visitors on average for your average home, which for you sellers is 5 to 10 potential parties or buyers every day on your properties or at every open house. So market is strengthening. There's a lot of buyers shopping right now, and there's a lot pulling the trigger. And again, in February, you're probably going to see the results of all of these escrows that have been open and buyers pulling the trigger and sellers accepting them. So word on the street is coming from our financial professional, our financial analyst nationwide, is that they're calling it the year of the fives. Have you heard of that, guys? The year of the fives. Now, whether it's true or not, I don't know. But what that means is that our financial analysts are thinking that our interest rates will drop sometime this year into the 5% rate. 5 point what? No one knows, but sub 6. If we fall sub 6, this Las Vegas market, and this is my opinion based on the stats and experience, will be on fire. I mean, that's the result. The buyers are here. Inventory is low. Demand is high. Interest rates have held back our buyers. Interest rates dip into the 5, sub 6. Our buyers will have the confidence to buy. Our investors will be back, And with all of that, even cash buyers will have to jump in so that they don't miss the boat, or our investors will jump in so they don't miss the boat, get the deal that they want now, because the percentages will make a lot of better sense. For investors, we've been having a lot of struggles in 2023, crunching the numbers, our cap rate, our return on investment, ROI rate, and trying to get positive cash flows have been extremely hard. And there's multiple ways to look at things, but as far as cash flow, it's been really hard to get positive. And it's dictated by financing if you're using leverage. So as the interest rates dip, we're able to hit the cash flows and get break evens and positive cash flows that our investors are looking for. In 2023, most of our investors were either cash, 1031 exchange money, financial hedge fund money, institutional money, or investors looking for simply potential appreciation on where they think Las Vegas is going, which they believe values are going to go up. And I tend to believe in this as well in the next 5 to 10 years. That's opinion based on facts, but that is why investors bought in 2023. Here in 2024, if interest rates cooperate, we'll be able to buy on both return on investment on cash flow and potential appreciation. And with that both lining up, I think that will really help our investment pool. How does this affect renters? So when interest rates are up and our investors are limited to mainly cash, 1031 exchange, institutional money, little or heavy down payment for financing. The long story short is we don't have a ton of investors attacking the market. Thus, we're not increasing our inventory of our rental pool. However, we're selling a lot of these rental pool as investors are confident with the numbers, and some of them are liquidating or moving their money into another property. So with that, our inventory, our available rentals are shrinking based on sales and are not being offsetted by purchases. When interest rates dip into a lot better figures than we're experiencing now, investors can hit the cash flows and start buying investment properties, offsetting or increasing the rental pool. But right now, because investments are being sold and rental inventory is decreasing, I'm sorry, renters, but your rents will probably increase based on that. So just beware, renters. If you are renting and you feel you have a pretty fair deal, and I would check if you're having a fair deal by getting a rent CMA, a rent market analysis, verifying what the market supports, because good rent simply means, am I paying market or am I paying above or below market rate, right? And so if you're paying below market rate, try to renew the property you're in, because I feel like rents are going to continue to raise until inventory increases. Hope that makes sense to you, tenants, but stay where you are if you're comfortable with the price you're paying, because I don't think it's going to get better in the short run. That's that. Investors, knowing what I just said, from the property management department, we are looking at retention though. And we're trying to maintain the same good tenants that we have, because even though the pool is getting smaller and prices may go up, rent amounts may go up, we want to make sure that the good tenants we have are the ones we try to keep, because we're seeing a lot of volatility in the type of applications we're seeing nowadays. And we do have concerns about the national credit card debt, which are affecting people's abilities to pay them and credit scores. So on average, this is my own personal, our company's Xpand Realty's experience. We're seeing a lot of applications with lower credit scores than we normally do. So, investors, think about that. We'll screen until we get a great applicant, but understand that the quality of applicants have shifted from what we saw the years in the past. So something to take a note of, investors. So that's a lot of information for you guys. We are super excited at Realtors. Here's the positive and negatives for you Realtors. It's the third month in a row where we've seen a decrease of realtor count on a national scale. Even on a Las Vegas scale, the amount of realtors have really reduced. The amount of lenders have really reduced. A lot of us have left the industry, and 2023 was a rough year for all of us in this industry. However, January was extremely crazy, on fire, hot as it can be, and we know that trend is still happening in February. And for everyone to know, spring is coming, and spring tends to be the hottest housing market there is as far as a seasonal chart. So we expect to see hot and heavy February, March, you guys. As long as interest rates stay consistent or dip, I believe that's what's going to happen. And more sales will happen. Units sold will increase. Investors will be back. And I just see a lot of movement going on in the residential world. So if you're in the market to sell or buy, consult your realtors today. Don't work reactively. Get ahead of it. Look at and understand the numbers I've shared with you. If you have questions on anything I share with you, reach out, because I'm happy to help you. We're happy to assist you and help you understand the market and where our market is probably going. No one has that crystal ball, but you want to have the best prepared mind and competitive advantage as you can based on where we're at today and where we've come from. And that's what we can really help you guys with. If you liked what you heard, subscribe to this channel, press the subscribe link, like this video, comment below, continue to support us so we can continue to deliver this information to you guys. And if you have questions, put it on the commentary below, because that will help us not only answer your questions, but it'll give us more content to meet you next podcast. We'd love to hear what you guys are thinking, so we can address those needs and add value to you guys. The whole reason we're here today is to add value. Education is the emphasis, and we're just talking about the 702. With that, if you guys are traveling to Vegas this week, be careful, stay off the freeways. The Super Bowl is here, and if you didn't know, it is the largest event in all of Las Vegas history. That's how big this thing is, you guys. So don't underestimate the power of football. The people are going to be here this weekend. Again, stay off the roads. Be safe. Don't drink and drive. Be responsible. Keep this town safe and have fun. Also, I'm curious who you guys are going for this red Super Bowl. Is it the Chiefs? Is it the 49ers? I will tell you who I'm going to root for this year, even though maybe I shouldn't on a real estate share, but I'm going to. I am not a Chiefs or 49ers fan, but I'm going to root for the 49ers, guys. So you guys have a great day. Let me know who you guys are rooting for. I'm curious to know, and leave your questions. You guys have a great day. Take care, and see you next time.